Uh, all right. Hello, everyone. We are Jolt Technologies, and this is our earnings call presentation presented by myself, Sam Cernet, Lillian Rosenbaum, and Cesar Rivera. I will now hand it off to Sam, who is going to start us out.
Thank you, Jason. So our firm is pursuing a cost leadership strategy. This includes offering high-quality, low PQ ratio products and multiple models of those products, creating a highly productive and efficient value chain, obtaining substantial market share in order to achieve economies of scale, as well as integrating robotics into our manufacturing process to increase productivity. Included on this slide is also the why, what, who, and how business model framework. I'll now pass it off to Jason.
Thank you, Sam. So the table in front of us shows our year 10 results, starting with our earnings per share growth. We were expecting to grow by $1.25 from our original $6.10 in year 9, but instead we dropped by $1.29 to bring us down to $4.81 for year 10. For our return on equity growth, we were expecting to grow 5% from our 37.7% in year 9 to 42.7%, but instead we dropped 12% to 25.7% for year 10. As you can also see, our stock price also dropped from our target of $150 to $133.35. The reasonings for these numbers I'll get to in a second. The good thing that came out of this year was our credit rating and our image rating. Our credit rating remained at an A, and our image rating was at an 88, which is pretty consistent with our previous years. So we're very happy about that. The problem with these results, and I'll be quoting from the book here, stock prices can be highly volatile, making it difficult to assess firm performance, particularly in the short term. And overall economic factors such as economic growth or contraction, the unemployment rate, the interest and exchange rates, all have direct bearing on stock prices. In year 10, the exchange rate for each region was extremely unfavorable, hence negative stock price gains you see in column 4 and the negative numbers that you also see in columns 2 and 3. I will now hand it off to Cesar, who will be talking about our operating metrics.
Thank you, Jason. So I'll be talking about the operating metrics and going into a little more detail. I'll be talking about product features, marketing, dividends, expansion of workstations, and employee satisfactions. So when it comes to product features, here at Jolt Technologies, we focus on bringing customers a high-quality product at a low cost. So in order to do this, we opted to provide an average amount of product features to both our drones and cameras. That way we can cut back on cost and maximize our shareholder expectations. When it comes to marketing, Jolt Technologies focuses on investing in marketing heavily so that the market share continues to grow and prosper. In the AC cameras, we have consistently upheld a 16-week promotion schedule across all of our regions, and this ensures market penetration of our product. When it comes to dividends, awarding dividends to our loyal shareholders ensures that we have a positive sentiment. So in year 10, we were able to award our shareholders a dividend, and that way we can keep them satisfied and having them to come back and help us. When it comes to the expansion of workstation, Jolt Technologies consistently tends to the workstations in order to promote less overtime hours and consistent employee satisfaction. These workstations help our product to remain efficient and competitive with all the other companies in our industry. When it comes to employee satisfaction, Jolt Technologies tends to want to have employees satisfied, and the way that we have been able to achieve this is by giving employees incentive bonuses, attendance bonuses, and as well as a fringe benefit packet. And that way we are able to offer these benefits to both our AC cameras and our UAV drone workforce, which helps keep our employees satisfied here at Jolt Technologies. I will pass it on once again to Sam, who will be explaining the performance metrics.
Thank you, Cesar. So taking a look at our year 9 to 10 performance metrics, you can see for earnings per share, return on equity, and stock price, we saw decreases in these numbers. We believe this is because of 2 reasons. Number 1 being disadvantageous exchange rates, and number 2 being a decrease in the expected increase of demand in these markets. As you can see, we have also listed many other metrics on this table. We believe two of the more important ones are manufacturing costs per unit of cameras and drones, and we saw decreases in these because we had increased our economies of scale by being able to spread out our fixed costs over a larger number of units. I'll now pass it off to Lillian.
Awesome. Thanks, Sam. So up until now, we've gone over our past and how we've achieved success, but Jolt Technologies is a forward-facing company, and we're always looking to improve in many ways, even through the hardship in the global marketplace that we've seen in the past few years. So here we've outlined a few actionable steps that you can see we are taking and have been taking to ensure a positive future for Jolt. So we want to increase camera features to provide value to customers and increase our market share continually. We'd like to increase drone marketing to catch up to the industry averages, as we have been lacking in that a bit. And continually, we'd like to increase camera marketing expenses to stay ahead of the curve, though we have been putting a lot of effort into that as of now. We'd also like to increase compensation for our workforce to maintain productivity. We like to keep our people happy because they give us so much. And also we like to offer competitive discount rates to obtain special contracts so that our products are in the marketplace as much as they can be. Finally, we want to continue to return value to shareholders through dividends. We'd like to keep them happy so they come back and help us out. So basically, this entire plan is leading us up to our projected year 11 performance. As we've said before, in year 10, our earnings per share and return on equity is not quite up to par with what our investors have expected, but our credit rating and image rating stand strong. This plan is consistent with our cost leadership strategy that has led us up to success in the previous years. And as executives and decision makers, we all make these cohesive decisions that propel us forward. Jolt Technologies will continue to utilize market data and strategy to remain competitive and confident in our business structure. Finally, we just wanted to thank you very much for your interest in Jolt Technologies, and we hope this information helps you to better understand our strategy and company goals. So we'll now field any questions that you might have. Thanks so much.